Here are some of the differences to be aware of when choosing from a large bank like JP Morgan versus a smaller bank like Evercore. And I'm using these companies as the masthead, but it really can be any company regardless of how known or unknown they are. So the first and probably one of the more obvious ones is going to be the difference in work. So usually at a larger bank, you're going to be very strictly held to Excel spreadsheets, PowerPoints, and a lot more formulaic things than something that are less technical. Now this has its pros and cons because on the one side, your technical skills, your modeling skills, your PowerPoint and like making materials for company skills are going to be very high, but you're probably going to get a very low amount of client interaction and thinking about the bigger picture, at least relative to someone with a different experience. In a smaller bank, you're probably still going to be using PowerPoint and Excel, but the level of thought and involvedness you might have in a deal process could be a little bit higher as far as autonomy goes. You might be on client calls with someone. You might actually be designing the background or how are we going to lay out this deck. The responsibility you get is probably going to be a little bit greater, which is going to make your brain stretch and challenge your thinking process a little bit more. At these smaller companies, they might even ask you for your opinion in a meeting, whereas at a larger one, they might not care because you're just an entry-level person. So at a larger bank, you might end up with super strong technical skills, but you might lose out on a little bit of that analytical piece you might get from a lower, smaller bank because you're just being involved in more things at once instead of being in a very direct corporate structure. If you're working at a larger company versus a smaller company, especially within banks, you usually also might find a difference in the comp structure. It might be a little bit more stable or might be a little bit higher for something like a well-known bulge bracket bank versus a very small bank. Now, the only outlier to this is essentially your elite boutique banks, which are smaller banks but just run at a very high level, very high output. Some of these usually have the largest comp in the industry. Now, another thing to really consider in your work experience when you're looking at a larger bank versus a smaller bank is the experience that you're going to get regarding the capital markets and M&A. So in a smaller bank or more nuanced bank, you'll definitely probably get experience to M&A, which are your mergers and acquisitions, but you might not have as much experience in the debt capital markets or equity capital markets, which might not be that big of a deal to you now, but if you're looking to go to a different field, that could impact what employers want from you or who they're willing to hire because you don't have experience in capital markets. And the last point, which doesn't really directly affect your day-to-day work, but let's say you decide to leave banking or you decide to leave finance, a bank that's larger is going to carry its name and carry a reputation on your resume versus a smaller bank, which employers might not look at and understand the significance of what you did there as much as someone coming from a JP Morgan or Goldman Sachs. And that can make it harder for you to find lucrative job opportunities outside of the field.